can you just introduce yourself?
Yes, thank you very much, Jason. It's a private joke. Yes, so I'm Matsi. I'm the founder of Furaha Africa Holdings, so it's my own enterprise. I'm also the vice chairperson of Simodisa, which is an industry association in South Africa that's progressing policy reform.
Okay, awesome. I'm Ropa. I am co-founder and CEO of Queza Technologies. So we're a startup working within the informal retail space in South Africa.
Thanks. Keert van Zyl, co-founder of Knives. I'm one of those bad VCs that Zach was talking about. Not really. Conscious capitalism. So we also have an accelerator model, Grindstone, which talks to what Zach was talking about around curating your own deal flow and being relevant across the startup value chain. So, yeah.
Cool. So just to start, Matsi, I know that Simodisa is working on a South African Startup Act. So can you talk a little bit about, in the context of Zach's presentation and the discussion, what is it exactly that you're trying to achieve here in South Africa, and what's happening? Where is the Startup Act in terms of the process and working with government?
Well, it is with great sadness that South Africa is coming late to the party of having a comprehensive Startup Act. And it's not a function of following suit, but it's no wonder as a startup in this country, it's very difficult to get investment, right? From a VC perspective, from a government perspective. It's very sad to know that as a startup in this country, there are no tax referrals. The minute you register a company, you're already taxed, whether you make money or not, and it doesn't give you an incentive to make money. And it's also very sad that as a startup in this country, it's very difficult to have the skills and the talent that's going to help you build your business. South Africa has a lot of acts or legislation that talks to building small businesses, but the reality, it's not for high impact, high growth entrepreneurs. You know, it's more for the base of the pyramid, which is fine, because yes, of course, we need to nurture base of the pyramid, but how do we ensure that we nurture high impact, high growth entrepreneurs in this country that are going to contribute towards the economy? Our economy right now is struggling, right? And how are we not being able to identify the high impact, high growth entrepreneurship space as one lever of progress in our country? So the idea of having a Startup Act is following suit with what everybody or every progressive country is doing on the continent and globally, but also it needs to talk to how do we collaborate, because as much as you've identified that Simodisa is doing work, we in essence are a secretariat, because an ecosystem has to work towards its own Startup Act. So how do we ensure that everybody in the entrepreneurship ecosystem, whether you're an accelerator, incubator, whether you're funding small businesses, you have a vested interest in ensuring that we do come up with a Startup Act that talks to us, high impact, high growth entrepreneurs. So our role as Simodisa is how do we lobby the relevant stakeholders, whether it's the government, whether it's civil society organizations, because there's lots of people interested in whether it's future females, Ikasi entrepreneurs. How are their voice part of this journey of us getting a comprehensive Startup Act that talks to all our progress in South Africa? So we're quite excited. We, at the beginning of the journey, on average, it takes between 2 to 3 years to actually get this passed by law. So government does have a role in ensuring that this, an act is passed. But we, as a collective, need to organize ourselves. There has to be clarity around who we are, what we are trying to achieve, how we're going to work with what already works in South Africa, and how we're going to fix the things that are not working. But also, how does it talk to us? Because we are a different kind of entrepreneurship, and we can't be treated like we are, base of the pyramid where we're selling tomatoes in the corner of the street. We are not. We're selling technologies, we gazelles, we want to be globally relevant. And how do people take us seriously? And also, lastly, sorry, I know I'm kind of rambling on, but I mean, our ability to attract international funding. South Africa is one of the most unattractive places. Zach mentioned a couple of countries, Mauritius, Delaware. I think the Netherlands is also quite up there in jurisdictions that are quite progressive in intellectual property. South Africa is not. We have exchange control. It's very, very difficult for international funders to come into South Africa and acquire our intellectual property. So an act is really going to talk to how do we remove all those hassles and how do we make ourselves more attractive. So I'll just leave it at that.
Thanks. And maybe we can speak to some actual examples just building off of that. So Kate, we were just at the VC Unconference and a lot of it was talking about structuring of businesses. We looked at one of your portfolio companies, how it's structured, and we don't have to name names or anything unless you want to. But can you know, Zach talks about grants and salary for founders, and all of these things are great, but then the absence of a Startup Act is pretty problematic, it seems, just based on the conversation that we had over the weekend. So can you talk and add some color to the real sort of challenges that startups face in your portfolio as a result of not having one?
Sure. Thanks for the context there, Matsi. Yeah, I think the Startup Act is not necessarily a magic wand that's now all of a sudden going to be enacted. I mean, there are issues with acts and stuff in South Africa, but I think it goes a little bit around our history and the fact that we are an economy built on mining and stuff and infrastructure and those type of things, whereas somewhere along the line the knowledge economy took over globally and our legislation stood behind, you know. So when it comes to a tech startup, and on the one hand there's some beautiful narrative and any podium that a politician or even a business person stands on, they talk about innovation and you know, entrepreneurship as in all those type of things. But those are words which at some point our entrepreneurs get to a sort of a ceiling where they are not supported by this ecosystem at all anymore. You know, so specifically if it's a startup, and let's just define it a little bit. You know, anyone who starts a business today is not necessarily a startup. You know, a startup is a high growth business in search of a repeatable, scalable business model, and at some point they find that scalability and the cost structure stays marginally sort of the same, and the revenue and the scalability just goes through the roof, which you can then replicate into other markets if you've found your beachhead market in South Africa. And it's that sort of scaling thing, you know, if you talk about an aerobotics or a data profit or some of the examples of the companies, you know, at some point South Africa's agri market is only so big, but the US or the European or the Chinese market is so much more bigger, and to get in there you need additional investment, etc., etc. And then, you know, without getting too technical, there are barriers, and those barriers are you know, first and foremost around you know, exchange controls and stuff for international investors to invest and back these type of companies. You know, they look at South Africa, and with respect, our politicians aren't doing us any favors. They don't want to take the political risk. They're happy to take the entrepreneurial risk, but yeah, look, give me something that I'm familiar with, a Delaware C Corp or something like that. And that also becomes, you know, you also need to really think about, not to mix too many things in one answer, but you also need to think about, as a VC, about the exits. You know, how do we, you know, as Knife, we've had a couple of examples of exits, and a lot of them were quite messy because we didn't actually think about the structuring early on. And you get to the end where a Visa or a Garmin or you know, Uber, luckily that one was well enough structured, or General Electric look at these businesses and they say, well, sure, you know, now I have to buy the South African, and just let me get this straight. I now have to ask the government, after we've done the due diligence, for permission whether we can do it. And we're like, no, but they always say yes, it takes 8 weeks. And so right now, and here's a real example, today is the 25th. It is payday, salary payday for a company which Knife Capital is investing in. And we've signed the documents, everything is done. We're waiting for the bank to tell us, because it's a dual structure, that we are allowed to do the deal, which they will. But yeah, the poor entrepreneurs, we had to last night make a plan for 1.1 million rand to pay the staff of a deal that we've approved a month ago, because we're waiting for the Reserve Bank to grace us with the fact that we may invest our own money into a company, which has happened to have a 30% of the money needs to go into the UK for various reasons. So it's those kind of barriers that just makes it so damn hard, and it's hard enough for the startups out there, you will know.
My biggest takeaway is that it's just probably a lot more lucrative to become a lawyer.
Exactly. It's a good actually, yes. Our next investment is going to be into a law firm.
Yeah, it's not bad. Yeah, exactly. Yes. So Ropa, let's talk from a entrepreneur's perspective. So you're sort of going through the journey right now of your fairly early stage. Quez's fairly early stage. You're raising some money. The business is based in South Africa, but I know that you have some investment from outside of South Africa as well. So can you just speak to sort of how all of this has impacted you as an early stage business, and does it conflate all that you're trying to achieve, given that there's so much else that's sort of pulling your mind share away from building the business, and how do you do that?
Absolutely. So I think it's actually very interesting, and just maybe to take it very back, I think we really need to dissect and understand that obviously they start at different stages, and I can speak definitely because I'm from an early stage. So at an early stage, I'm glad that Zach has brought up the story of IP, because it's not something you're thinking about. At an early stage, you're still actually thinking, I need to find, funding, investment, just so that I can, continue with the business for the next year or so. So I think a lot of these conversations actually need to be had with startups to begin with, where you're already talking about IP, but that only comes at a later stage when you're now going, towards your Series A. But at an early stage, I think one of the things you brought up is actually understanding that, there's need for training. So a lot of these startups are probably working in corporates. There's a shortage of, employment, and we actually need to create more opportunity. So we actually need to, I think the startup is really important in that we actually need to sort of get those entrepreneurs going, right? So actually ensuring that people can get out of their jobs, they're comfortable enough to get out of their jobs. They're not thinking about where am I going to stay, what am I going to eat. I've got a good friend who likes to say, you can't build a business when you're hungry. So I think at an early stage, those are some of the challenges we're thinking about, and we're not even thinking about the point where, later on I need to register my business and my IP somewhere else. Specifically for us, we're working within the informal retail space, and I think one of the biggest challenges that we're dealing with is cash. It's something that has been solved across the continent. There's mobile money elsewhere, but in South Africa, the Reserve Bank has regulations that have inhibited the success of mobile money in the country. So it's something that's very basic that could be solved, but I think there isn't enough support that's been put already to actually solve these challenges for a business. And I'm pretty sure it's the same in various other sectors that I can't speak to. So I think really there is need to actually start having these conversations, as Matsi's mentioning, that you need to have it with all the different stakeholders involved. So yeah, I think that's really my take. I can speak for the startups in the room and really say that this is definitely something that needs to be done to support our success.
Sorry. So maybe just to add on there, it is overwhelming in the beginning for being a startup, for sure. And do you really need to now worry about 3 years, 4 years from now, things like IP, things like growth? But it is just a little bit, you have to actually just go from the assumption that you will succeed. So I think if you're a lifestyle business and you pewter out and it doesn't actually really get to that level of success, that obviously is going to happen to 60-70% of the startups, which they don't fail, but they just get somewhere. But it's basically the ones that really succeed that need this kind of support and all these things to look at early on. And then even for the companies that just actually double in value or triple in value, which is good enough in some circles, but in these things not quite 10x. But yeah, I mean, that entrepreneur that took money out of their bond to put behind their startup, they don't get any incentives. But the angel investor that invests via 12J, they can deduct it from taxable income. And that person is already a high net worth individual. And it's those type of things to just actually make it more accessible, to say, make it much easier for startups to actually just get a little bit of a head up. I mean, every 100,000 rand that you save is a couple more months of runway.
Zach, I'll ask you also, just for fear of not making this just a South African conversation, I mean, you talked a lot about sort of the challenges with term sheets and the opportunity for a Startup Act. We just heard from, the South African perspective. Can you speak a little bit to what is it like contextually for some of the startups that you work with in other markets? Are there different challenges, for example, in East Africa or West Africa, as it relates to regulation or as it relates to structuring businesses? Or, you mentioned Flutterwave and Paystack, for example. I know that it's much easier just for a Nigerian company to just go and raise a Delaware or register a Delaware LLC. But what else do we need to consider then in that context?
I think let's as a founder, you have two options. You can wait around till your government supports you and creates a Startup Act, or you can do what JFK said. What can you do for your country? Right? I mean, it sounds counterintuitive, but Nigeria, like South Africa, South Africa dependent, or is still dependent to a large extent on minerals and mining. You know, we are an old economy. But guess what? So is Nigeria. People forget that. Nigeria's economy is primarily driven by oil and gas. Why is it that you have companies like Flutterwave, Kuda Bank, Paystack, MFS, Lori, Kobo? I mean, out of the top 20 startups in Africa, about 60% of them are in Nigeria. I don't see my Nigerian friends complaining about how bad the government is. They just flip and go and do shit. Right? So you can either be a whiner, or you can be a winner. That's an original quote, by the way. You can quote me in that. You can be a whiner, or you can be a winner. Right? So that's why we back founders that irrespective of how difficult their government is, you find a way out. Right? Even the big corporates like Uber that have had shit from the regulators go and find a way to do it. So what if your government isn't supportive of you? I mean, it's a similar thing in Kenya. You know, Sendi in Kenya and Twiga in Kenya, two of the top startups in Kenya, had massive regulation hurdles from the government of Kenya. What did they do? They figured a way out, right? All their IPs offshore, and they figured a way to make themselves more investable to international investors. And because... And that's why I mentioned the 5 attributes of startup ecosystems. If you know that you live in Nairobi or you live in Lagos and you have a captive market and consumer base that will feed you revenue if you have a product market fit, that's all you need. You could be an unsecured lending platform in Nigeria, one amongst 20 in Lagos alone, and you've got enough customers till the cows come home. Right? And you could all be worth north of $20 million. Do it. I mean, we invested in a company in Nigeria where they moved the IP to the UK, and the evaluation now is 9-figure dollars in 2 years. They're not complaining. They just go out and do it. What did Richard Branson say? Better ask for forgiveness than for permission. Do it.
Yeah, I think I agree with you, Zach. There certainly is a responsibility on the entrepreneur, because as much as we can lobby for a Startup Act, meaning that we need to have an enabling environment, you look at companies like Yoko. I mean, they were not serial incubatees. You know, they didn't jump from one incubation acceleration program to another. They just got on with it. They built a business which is now sustainable, which is now scalable. Everybody has a responsibility. As an entrepreneur, it is your responsibility to grow your business, to scale your business, to hustle through the challenges. As a government, you know, we spend a lot of money. The government spends a lot of money in trying to build small businesses, but it has a whole layer of challenges, right? And some of that money could actually be used investing in skills, in talent, and all the things that could actually help you build your business. Accelerators, incubators, there's also this thing of, as accelerators and incubators, we're building an environment for ourselves. So if there's funding, let's say there's 100 rands worth of funding. As an accelerator, I'll probably use 80% of that towards staffing, creating programs, and then 20% goes to the actual entrepreneurs who are the beneficiaries. So as much as we've identified various key holders, there's a lot of nonsense that's happening within them. And I think we also need to ensure that we do our part and we play our part. So yeah, I think let's have a Startup Act to create an enabling environment. However, we all have a responsibility to make sure that we're doing what we're supposed to be doing. And as startups, you need to start up and you need to scale up and grow your business.
Do you want to add something?
I just have a quick comment. So I like that you give the example of the Yoko founders, because I previously worked for Yoko. But I think there's a very different profile of startups. So you've got the startup like that are being groomed out of the university. So you're straight out of university. You find an idea, you want to come up with the idea and actually build it up. At that stage, there's a lot of learning. It's a really steep learning curve, and that's where I think where the accelerator programs and all of that comes into play, right? And they're really important in that space. But I think also the things that are being focused within these accelerator programs aren't very beneficial. I, for one, have gone through a couple, and I can count maybe 1 or 2 that have actually genuinely been beneficial. And I can tell you for sure, nobody's ever spoken about IP in that acceleration program. And usually at the early stage, right, they're speaking about product market fit, which is important, traction, which is all important, but they're not really grooming you to scale, to go out and go beyond. It's really focusing on the basics. So I think maybe there's also responsibility to rethink what's been taught in these accelerator programs. And yes, you are absolutely right. 80% is going to staffing. As startups, we're like, at the end of the day, what is it? So I've gone through this acceleration program. What am I getting out of it? They're like, oh, yeah, we'll introduce you to investors. You have conversations with 20 people, and nothing still comes out. So I think maybe also rethinking the way these programs are structured is quite important.
Sorry, I just have to mention, you heard it here first from my lawyer. A WhatsApp. Ex-con approval received. There are a few conditions that I need to take a look at, and it seems like we need to go in for approval again for each of the other tranches, but probably not worth pushing back on that now. So we shouldn't be that excited about that. But I mean, so generally, again, this is now an example where we're doing one investment, and basically, if the company achieves certain milestones, which is more due diligence gaps, you know, like marketing plans, this, that, they unlock a few more tranches. Now we have to go back to the Reserve Bank at each tranche. Anyway, we'll fight that later. But yay, we can pay salaries.
Congratulations. So, you know, one thing that I want to ask in the context of this conversation is, you know, there's a lot of businesses that are successful, growing, scaling businesses on the continent who are filling market gaps, right? There's a lot of things that ought to exist that are public goods that the government doesn't fund, and startups, private sectors filling that, even to some extent from a financing perspective. You know, development agencies, philanthropic entities are filling those gaps. And so I guess while it's great that, you know, there's organizations like CIMADISA that are advocating for a Startup Act and doing the work with government, because startups definitely don't have the time to do that, in lieu of the government coming to the table in full force, are there other things that the private sector ought to consider? And I'm thinking, as an example, for example, the Stripe Atlas, right? So it's a private company that just made it super easy and cheap for anyone around the world to register a Delaware LLC. Costs $500. Should the private sector be thinking about doing more things on the continent? Because, yeah, otherwise we wait around for government forever and nothing happens. This is a sort of a question to anyone in the panel.
Yeah, maybe just to say for sure, and I think that is the beauty of the private sectors and the context of forgiveness and permission, is that to push on through and enable that. I mean, we know that the funding model of venture capital in specifically in Africa is going to be disrupted, is going to change by super angels or by crowdfunding or collaborating and just smoothing the wheels to make it easier for companies. Yeah, we're certainly not waiting for government. As I said earlier, this is not a magic wand, but you know, in a fragmented ecosystem, and a lot of the ecosystems in Africa are fragmented, and there's pockets of excellence and so forth. There are various players. I mean, startups, definitely the main player on the scene, which people sometimes forget. The funders have a role to play, private sector have a role to play, but government can just make that playing field much more enabling and so forth. So that's the pocket we're talking about in this panel. But from a private sector, for sure. I mean, you know, whether it's PR or whether it's real. You know, in South Africa last week, the 50 of the big corporates came together and basically said, "Look, we will definitely pay SMEs within 30 days." You know, why one should be pat on the back for something you should be doing anyway is maybe another part for a different day. But hey, it's not a bad thing, you know. I mean, there's the Gauteng Township Development Bill, which they are looking at the township economy, and then 30% of their procurement, 15 days payment to township entrepreneurs, you know, which is now going to be enacted up there. But you know, those are just examples of certain things. But your example of Stripe is amazing. I mean, Knife certainly have pushed a few companies through that channel. There's many ways that these things are going to get absolutely disrupted by the private sector. We're definitely not waiting for government. We are forging ahead, and hopefully can kind of enable government. I also must just say, I mean, I'm also on the board of SAFCA, and Matsi will also back this up from our engagement with CIMADISA, with National Treasury and Saab and these guys. I mean, they are not like evil, bad. They are actually trying to understand, and the top brains they are very much switched on. I mean, but you can just imagine the bureaucracy of getting anything through, and then dealing with with capitalists and funders, and what is, there is a skepticism. We don't trust each other as government and private sector, but private sector is playing a role.
If I could just quickly add something there. I mentioned earlier about the importance of the corporate startup ecosystem growing. So if you look at 4 sectors: retail, banking, insurance, and telcos, right? There are about 4 or 5 players that have a presence on the entire continent. It's MTN, Vodacom in telcos, it's Standard Bank, EcoBank, and similar thing for insurance, Old Mutual, Sanlam, etc. So a lot of these corporates have operations in at least 10 or more major African economies, right? So you've got to look at, if you look at the US, for example, corporate venture capital makes up almost 40% of all VC activity in the US, right? They don't brag about it, but the numbers don't lie, right? In South Africa, in Nigeria, in Kenya, and Egypt, the 4 largest ecosystems on the continent, there's almost no corporate venture capital, right? So corporates don't understand how it's in their best interests to help startups scale across the continent. And it's a bit ironical because if you're an eco-bank and you've got a presence in 37 African countries, and you've got a corporate venturing arm that invests in the most innovative fintechs, you can help those founders scale into multiple markets through your distribution networks. It's literally sitting on your table to take, and you're saying no. So you asked about the private sector, but specifically banks, insurers, telcos, and retailers can do a lot more by just opening up corporate venturing arms and helping, literally eating your own dog food by helping startups that you invest in scale across countries. Because it's pretty obvious, except for certain markets like Nigeria, it is very hard for you to become a $100 million company if your market is just South Africa or just Kenya or just Malawi. And the only way you can scale is if you work with large corporates, but they have to understand how they can help you by doing that. So I would say the private sector, but specifically large corporates, have a huge role to play, but they have to have equity upside in addition to just commercial upside. So that's a very important point I want to make here.
Sure, I think, Justin, it's important, and Kit and Zach, I totally agree. I think grand statements are being made, but if you ask me, what are they really doing for us? So grand statements about commitments, we're going to give X amount of money towards this and that, we're going to pay startups in X amount. Where? As a startup, you're asking yourself, but where? I've had the biggest challenges with working with corporates because they don't understand us as startups. I think it's this fear of the unknown or fear of not understanding who they are, fear of disruption. But as much as you're going to make big, bold, grand statements, you must walk the talk. Because for us startups, it's important that we work with corporates because it gives us access to markets, access to scale. And there's certainly a lot of work that we can do in just workshopping corporates as to what role do you really play? Do you understand how big a role you play in these ecosystems? So I think it's part of the work we'll be doing as we roll on our journey towards having a Startup Act, because corporates have a big role. And we need to sit with the top innovation minds from these corporates and say, ladies and gentlemen, this is who we are, this is where we're going, and this is the role you're going to play. Are you going to sign up or not?
Yeah, and certainly we can also just hope that news like a $200 million exit of a startup, for example, things like that will start to change some hearts and minds and move the needle in that direction because, yeah, I mean, so often we also defer and say we're waiting for big exits or something like that, right? And so hopefully the tide will start to shift. So I see we've just got a few minutes left, so I don't know if we wanted to open up for any questions or if anyone had any questions either for this panel or for Zach's presentation, but maybe we can do that now. I see you've got a hand. There's a microphone that's going to come around. Just 1 second. Changing its hat.
And while the mic's going around, just remember corporate venture capital is not the same as corporate M&A. South Africa is a very acquisitive corporate M&A culture, but they pay ridiculously cheap multiples. That doesn't move the needle. Just saying.
So go to your corporates and teach them the difference. Please. Okay, go for it.
Yeah. So Zach, I mean, we've got a relationship, and you know our ventures, and the relationship with GVG, which is a big corporate in Africa. So that's our value proposition to startups is we want to invest in you, but there's so much more than just investing. We want to expose. If you're looking to grow into Africa, we'll use GVG's network with the African governments and move you into Africa. But then you said there from a corporate side, you said, it's not just commercial partnerships upside, but the equity side that's very important. So can you just elaborate on that? Because we've chatted to startups where they're very happy just with the commercial agreement and not equity. So is that from an investor standpoint or a startup standpoint or both?
Listen, it's a tough one. I'm personally not a fan of a corporate saying, hey, we're going to add so much value from a commercial standpoint. That is worth X million rand or dollars, so let's convert that into equity. Bullshit. Right? Commercial in, commercial out. I help you with $1 million worth of clients, I'm going to take a percentage of that. I'm happy with that. Equity in, equity out. Commercial in, commercial out. If I'm doing commercial in but equity out and I double dip on this, no, stay away. So just red flags. It's high level. Yeah.
So there was another question over there.
You've got a very powerful voice.
Thank you, man. So it's a two-part question, slightly unrelated. But so if there's not enough time to really double dip on it, I'm more than happy to take your number so you can give me more free advice. Like how quickly is the dial moving in terms of risk appetite between corporate banks and small-scale farmers in the absence of traditional security? Because land tenure is a painstaking problem for small-scale farmers. And what we do, we believe it cannot be that land tenure is still the only way we can secure returns for a bank. So I just wanted to, I don't know if you know about the sector within your banking experience. So if you do know, just how much has the dial moved in terms of that conversation? Secondly, what you said about exporting our IPs offshore too soon. I just want to understand what those that pay for the IPs to go offshore, what additional benefits what do we miss out on when they take it offshore? If for a case like, I think it's Paystack, where Nigeria still receives all of the social benefits, all of the impact is still in Nigeria, and yet the IP is offshore. Apart from all of that social impact, what more do we miss out on by the IP being offshore? Thank you.
So I'll tackle the second question. The first one we can chat offline. It's agri-lending and banks. That's a whole kettle of fish. But the idea about moving your IP offshore is because if your market is beyond the borders of South Africa or beyond the borders of Kenya, whatever, it's very hard for international investors to invest in jurisdictions that are not investment friendly, and that's capital gains tax, corporate income tax, dividends withholding tax, and the ability to repatriate funds freely from one geography to another, right? So if you have almost nothing to lose by moving your IP to Delaware or Guernsey or UK on day one. I mean, Justin mentioned Stripe Atlas. There are at least 5 companies that can do it for you for less than $500. You move your IP offshore on day 1, not day 20, because whatever you've built between 1 and day 20 can be used against you to say, nope, you built that piece of code in South Africa and you paid a developer to do it, therefore we want our pound of flesh. Move your IP offshore on day 1. Or you can wait till the government changes, but then you've lost all that time. So, but you pay your staff in South Africa, so you pay taxes to SARS. SARS is happy, and you create jobs here, so the government of South Africa is happy, but you investors are happier because you're investing dollars and pounds into a Delaware entity and getting dollars and pounds out when you exit.
Just for context, the example that we were talking about with Knife's portfolio company, they had waited and they said they really regretted waiting because it was just so much additional work while they were fundraising, and there was some stipulations around fundraising to the IP needed to be offshore. So yeah, they just said do it. If they had a magic ball, they would have done it 2 years ago or however long. So I think there was one more question there in the corner.
So yeah, no one understood what I just said on that panel, isn't it? So my name is Claiborne. I'm the CEO of DevTouch. And what we look to do is connect by making sure that we speak one universal language. Because if you understand what I'm saying, I in turn can give you my 400 billion worth of value for us being able to connect and truly become global. So now the conversation no more has any limits, is it? Because you speak what I speak, and I speak what you speak. And now that we can have a connection, we can truly take over globally, but not taking over in a sense that we want to dominate the world. We're a social impact business. And we believe that if you invest in people, you create exponential growth. So now 10X is great, and it's wonderful, and it's amazing. And Grant Cardone is living in his overseas castle, able to do pretty much anything while we're sitting here working, just by the way, in a beautiful Cape Town, and able to really enjoy everything, right?
Can you run to the question? Thanks.
Cool. My question then is how do we truly create a global connection that takes all of this red tape away?
It's an interesting question. I think one way we're doing it is ensuring that we do have a standardized act that corroborates what everybody else is doing, because I think the problems are very similar across the world. So that is one way of doing it. I'm not sure what my other panelists would have ideas around speaking on the same platform.
Hello. Yeah, I mean, and that's exactly what we are talking about. So you have to create the conduit, or to make things a little bit more familiar. There's no point in fighting the system. You know, if it is investment you're after or growth you're after, then you need to make sure that you talk that language of your stakeholders. So it all starts with your partner universe to say, well, if it is just a company that in many of those examples that are just going to service the South African market for a specific reason. I mean, not every company growing up in Africa and Kenya and all over, in terms of not everything's a payment cross-border business, then you need to acknowledge that and talk to your stakeholders there. So what we are talking about here is just to make it more clear, because at the moment it's the uncertainty of the investors and the stakeholders and everyone having to take a bet on a entrepreneur in Africa, which everyone, we don't have to sell that narrative. That narrative of the entrepreneurship gene, the fact that we are resilient, can make plans, that we will get there despite that is clearly sold. But the political risk and the fact that, all these things that Zach were talking about, taxes and all that kind of stuff, that everyone's a little bit scared of. So if you can talk that language and smooth that, then funds can flow freely, and the universal language of making money, creating jobs. And we are talking about job creation and economic growth. Those are the two. I mean, when you distill all of this down, we had a massive workshop on Sunday morning, and as part of the collective, there's many things around ideas on how a startup act could look, but in the center of that, it is all about job creation and economic growth, which pays taxes, which creates money back into the system, et cetera, et cetera. So we are kind of talking the same language to what government wants. I mean, if you ask government, what are your key thing? Job creation, economic growth. Well, guess what? That is what we're talking about, but we're talking so different languages in terms of what is important for us to get there.
Well said. I think that we will leave it there. So I just wanted to say thank you to the panelists for joining us here, and to Christoph and the AfricArena team for having us, and to all of you for listening to us for 45 minutes.
Thank you, Jess.
Great stuff. Please, one more time, a massive round of applause. Our fantastic panelists. And Zach for that great